Okay, good morning, everyone. My name is Marquita Wiley, and I want to welcome you to the third in a series of webinars that we've presented, we being Innovative Business Advisors. Today's topic is guidance for small businesses related to the COVID-19 legislation that has come out over the course of the last 2 weeks. Specifically today, we're focused on the CARE Act. And we have on our panel today, again, Steve Denny and Terry Lammers, who are the principals of Innovative Business Advisors. Steve will be our primary presenter today. Joining us for questions and answers and for added clarity are David Rubin and Brian McCarthy. David and Brian are with American Bank, and you need to know that American Bank was Missouri's largest SBA lender in the 7A category for the fiscal year 2019. So they've agreed to come on because much of the program that we'll be talking about relates to how your bank can help you navigate through the variety of programs that are available to you. So with that said, Steve Denny, I'm going to turn the webinar over to you.
Good morning. And thank you, Marquita, for moderating these webinars. We appreciate the time and effort you're putting into these. We're getting a very large response and hope that the information is very helpful. This is going to be a little unusual today in that we elected to bring this on instead of waiting until Friday. There are so many questions out there with the CARES Act becoming law on Friday afternoon. And I just love this slide. I'm from the government and I'm here to help. And this is the first time in my lifetime that I can really point to that and say, yes, there is an awful lot of help out there, particularly for business owners. So what we're going to cover today is an overview of the CARES Act. We're going to talk specifically about the Payroll Protection Program and give you a lot of detail about that program and how it actually works. In addition to that, the CARES Act made some significant changes to the Economic Injury Disaster Loan Program. We're going to cover those changes for you in detail as well. A new feature that they've added to the Economic Injury Disaster Loans are EIDL grants, and we'll talk to you specifically about those. A lot of folks have heard about the changes to unemployment insurance, specifically the $600 a week. That's in the Act under the Pandemic Unemployment Assistance division of the Act, and we're going to cover all of the specifics of that area for you as well. There's also some rebates that are coming, and this is the $1,200 per adult and $500 per child that many have heard about on the news media. The Act refers to those as the 2020 recovery rebates, and we'll talk to you about those in detail. There are some additional special rules that have been put into play for use of retirement funds. So if you've got IRA or 401k funds that are available for you to tap, there are some specific rules that are temporary in nature that have been put into place so that people have the ability to use those. There are some additional information regarding employee retention credits, and then there are a couple of specific labor and finance provisions, and we'll get into all of these in more detail. So let me begin with the Payroll Protection Program. The Payroll Protection Program is a new type of law that provides for SBA loans that are delivered through authorized lenders who elect to participate in the program. This is an interesting twist. So there are within the SBA lending community banks such as American that have elected to participate in various 7A and 504 loans and other SBA products. All the banks that are currently authorized as SBA lenders have the ability to elect to participate in the Payroll Protection Program. But it's important to note that even if you have a SBA loan with a specific bank, they may or may not elect to participate here. So it would be important for you to check with your bank and find out if they are going to be participating as part of the Payroll Protection Program. And it's not just banks, it's also available for credit unions, farm credit, other types of lenders. So I would expect that we're probably all gonna see a lot of things in our email inbox and on social media about lenders that are electing to participate in this area. And there should be many more resources that become available. One of the things that this payroll protection program covers is businesses that have less than 500 employees. It also covers businesses that are larger businesses that have less than 500 employees per location. The Act applies to nonprofits that are 501c3s. It also applies to self-employed independent contractors. It applies to veterans organizations and for tribal businesses. One of the very unique features of this is that it's 100% SBA guarantee. So I'll get into a little bit more detail about that. But a couple of the specific features are it also has no recourse. It doesn't require any personal guarantee. There are no collateral requirements, and there are no prepayment requirements. There are no fees associated with this loan. It is at a 4% maximum interest rate, and it can be up to a 10-year maximum maturity. The most interesting part of it is that 100% or less of this loan is forgivable if it's used as designed. So basically, what that means is whatever portion of the loan use proceeds is provable can be forgiven. And finally, you need to know that there is no tax consequence for the loan forgiveness if, in fact, you take one of these loans and are later forgiven for repayment. So what can you use it for? Very limited in the things that you can use the proceeds of this loan for. And you can see on your screen the most important thing is for payroll expenses and benefits thereof, which include healthcare, leave, and any other benefit insurance programs that you provide for your employees. It can be used for salaries, even salaries of the owner when the owner is an employee of the business, for commissions, and for independent contractors. But note that it cannot cover anything more than $100,000 per employee. So there's a cap on the amount of compensation that any particular employee of the business can earn for funds that are used from the payroll protection program. In addition to that, you can use funds for your mortgage interest or your rent payments or lease payments. You can also use it for utility payments, and you can use it for interest portion of any other debt that you as a business owner had incurred and the business pays for prior to the covered period. So it's important to note that you cannot use it for debt retirement. One of the big questions would be, well, how do I apply for this, and how do I understand what I'm available to receive? So there are some provisions about the maximum amount that you can apply for, and I'm going to give you a simple overview of how that formula works. So what you do as a business owner is you take the average total monthly payments for your payroll costs during the prior 1-year period. And that would be all of your salaries, wages, benefits, commissions, leave, insurance, all of your payroll associated costs over the previous year. You average those to the average monthly amount that the business has expended. You multiply that amount by 2.5%, and that's how you derive your maximum loan amount. I should also note that there is a loan available here for no more than $10 million. And if you already have a SBA EIDL loan, you can also roll that loan into this payroll protection loan as well. But due to the interest rates, that may be something you'll want to make sure that you've got the best advantage available to you. So who's eligible for this? Any business that began operation, or actually was in operation on February 15th of 2020. So didn't necessarily have to be in business in 2019, but you definitely had to be in business and operating on February 15th of 2020. For businesses that have employees or paid independent contractors, all of those businesses would apply. And this is a little bit different than most in that basically, while the banks are going to determine exactly what the lending guidelines are and what they're going to require in order to make loans under these provisions, you must certify that the loan that you take is used to support ongoing operations. And you must certify that the funds are used to retain workers and make payments accordingly for mortgage or rent or lease or utility payments. You've also got to certify that you don't have any other pending applications with other lenders. So you can't go out and apply for payroll protection program loans with multiple lenders and then make a decision about which one you're going to take. And then finally, you've also got to certify that you've not received any other duplicative loans. So you can't do a payroll protection program with one lender and 3 months later go do another one. So it's designed to be a one-time benefit. The other interesting feature of the loans that I didn't mention earlier is there's also an automatic deferral of payments for 6 months. And what happens in that situation is the SBA will actually step in and make your principal and interest payments for the first 6 months. The lenders will have some discretion and ability to be able to extend that up to 12 months, but the SBA has already said that they'll cover the first 6 months.
Steve, may I interrupt just for a minute? Couple things on logistics here. Some people are beginning to ask questions. Please use the Q&A box on the lower middle of your screen as the tracking point for all of our questions and answers. What we are doing in the background, if you will type your questions in now, we will actually begin answering those questions via that chat dialogue. And I don't want to use the word chat because I really want you to use the Q&A tab, not the chat tab, because apparently that chat tab is not being followed and monitored. Look below on your screen, you'll see a Q&A tab. Type in your question, we will type in answers. And then as we get to the end of the webinar, we will actually recap many of those questions back in a live mode in the webinar. Steve, go ahead. Sorry for that interruption.
No problem. Thank you, Marquita. So again, I want to reiterate, if you already have an economic injury disaster loan, the payroll protection program loans are designed where you can roll that EIDL loan into your payroll protection loan as well. But the only portion of the loan that is forgivable is that we discussed earlier regarding the expense that you used for payroll, interest, utilities, and rent. In addition to the payroll protection program, the CARES Act made some major changes to the economic injury disaster loan. Let me go through those with you now. And it's important to note that you can apply for both the payroll protection program and the economic injury disaster loan. That's one of the initial changes that came as part of this CARES Act legislation. In the original applications for an economic injury disaster loan, there was a requirement that the business had to be in operation for at least the preceding year. They've waived that. So the big question is, will they still require that the business had to be open by February 15th? I would assume for the purposes of application that that's probably so, but we don't know the actual answer to that yet. They also waived the personal guarantee requirement on all loans that are made up to $200,000 in loan value. So there was a much lower threshold in the previous EIDL loan overview, and they've dramatically expanded that. So there's no personal guarantee requirement up to $200,000 in loan value. They also waived the test that said you're unable to get credit elsewhere. So whether or not you're able to get credit elsewhere, you are able to apply for the economic injury disaster loans. And they also waived the requirement to provide tax returns. So SBA has been given authority to approve solely on a credit score, and they may use alternative methods to determine whether the applicant has an ability to repay. One of the other significant enhancements is they've added what they call the economic injury disaster loan grants. So basically what happens is as soon as you apply, as soon as you make application for this loan type, you can apply for an advanced grant of up to $10,000. And that grant, they are endeavoring to deliver that $10,000 directly to you in a matter of days. And even if you're denied, there's no repayment required on that initial grant. So consider that an application grant. So let's talk a little bit about the big difference between economic injury disaster loans, what you can use the money for, and then the payroll protection program. So under the SBA EIDL loans, you can use the money for working capital. So that's all of your cash needs for your business, your accounts receivable, your inventory, work in process, your accounts payable, and also for the wages and taxes and other debt payments that you already have scheduled in the business. You can use the money to pay all of your short-term liabilities. Those are all of your payments that you already have scheduled for your business. You can use the money to cover payroll expenses and any other operating expenses that are in your business, and any obligation that cannot be met due to revenue losses. So these are existing obligations that the business has, which you're not able to meet due to the fact that you may not have any sales revenue or significantly lower sales revenue. And if you have special expenses that are incurred solely as a result of the disaster's impact, those are additional expenses which can be used. However, let me reiterate, you cannot use economic injury disaster loans to refinance any long-term debt that you had outstanding, and you may not use these loans to include any of the lost profits that you may be experiencing in your business. So those are the two real exceptions to how you can use the funds. So that covers the main loan programs that are available now out there. I'm going to move over to covering the pandemic unemployment assistance. And there is a new classification of unemployment assistance, and that's what they refer to as the pandemic assistance. So pandemic assistance is designed for those that are not eligible for regular unemployment compensation or other extended benefits. It is also extended for those who have already exhausted all their unemployment benefits that are available to them under normal circumstances. It has a requirement that everybody that applies must self-certify, and you've got to self-certify that you're able and available for work except for the health emergency impact, and that you are self-employed. So this pandemic assistance is really designed for sole proprietors, the self-employed, independent contractors, gig workers, Uber drivers, those that are doing tasks such as tackle and other things through the internet these days. The only people that are ineligible for the pandemic assistance are those that have the ability to telework with their regular pay, and those other employees that are receiving paid sick leave or other leave benefits through their employer. So this is a new form of unemployment insurance that applies to a whole new group of people that are traditionally not applicable for receiving unemployment insurance. So that goes into some adjustments about even those that are already in the unemployment system that are applicable under current law, and then these new range of folks under the pandemic assistance, the amount that they can receive has changed under this law. So you're allowed the weekly benefit that's authorized under the employment compensations of the particular state that you're in. In addition to that, the federal government is providing $600 per week in addition to whatever the state limits are. So this $600, there's been an awful lot of discussion about, but understand that this is only for a short period of time. It's only for the 4-month period from April 1st to July 31st. The other major change is when you typically apply for unemployment insurance in whatever state you happen to be in, there's typically a waiting period. In the first week, the state doesn't provide any aid, but under this law, the states are going to waive that first week waiting period. So how long is the total unemployment now available? As long as the covered individual's unemployment, partial employment, or inability to work due to the COVID-19 emergency continues, basically, we don't know. But we do know that if you're in the system under the standard unemployment insurance, this law also adds an additional 13 weeks after the state mandated coverage runs out. up to a total of 12/31/2020. Now keep in mind that that additional $600 only applies for a very limited period of time, only for that 4-month period of time. But the rest of it runs until the end of the year. And also keep in mind that this is in addition to the short-time comp program, which is basically as what we had shared with you guys before, the Missouri Shared Work Program and the Illinois Sharing the Work Program. Those are unemployment compensation programs whereby employers can keep people on the payroll, pay them and schedule them for many hours less than they might have originally been scheduled. And then while they are still employees, they have the right to file for unemployment insurance benefits and receive benefits in addition to the work that they may be earning as employees. So those programs are still out there, and while I don't detail them on the slide, I encourage everybody to take a look at those. So again, just to recoup, it's a little bit confusing, but a whole new classification of people that are eligible for unemployment insurance now under the Pandemic Assistance Program. And then for all of those new classification of people and all the existing people that are under unemployment insurance, everybody is applicable for that additional $600 a week for this specific 4-month period of time. So some pretty big changes to the unemployment insurance program as a whole. I'm going to now move on to the rebates. A lot of talk in the news media about the rebates, and the law basically calls those 2020 pandemic rebates. And they are $1,200 per individual, $2,400 for a joint return, and $500 per child. And they're going to take the number of children off of the most recent tax returns. Keep in mind that for people that are making more than $150,000 joint, or $112,500 as head of household, or $75,000 as an individual, these rebates begin to phase out and are completely phased out by the time you get to $99,000 as a single individual, or $198,000 for a joint filer. These rebates are actually a credit against the tax that's imposed for 2020. So, we're mid-year in 2020. Basically, what the federal government here is doing is they're advancing all of us an advanced refund based on our 2020 tax returns. And these refunds are really non-refundable. So we don't have to worry about paying those back. So it's a very interesting thing, but you can take a look at for your personal situation and each of the people in your organization. If your joint return had income of less than $150,000, you'll get the maximum amount of the rebate. If your joint return had more than $198,000 in income, and I'm talking about adjusted gross income, then you will not be applicable for the rebates. So let me move on to the special rules for retirement funds use. For those that have the ability to tap into retirement funds, it has traditionally not been available to you to make an early withdrawal. And now what they've done is they've made it so that you can take up to $100,000 as a withdrawal out of any of your retirement funds, and it will not be a taxable event when you receive the money. In addition to that, you have the ability to be able to repay those funds back into your retirement accounts at some point in the future, and you can put those monies back without penalty as well. So it does provide some additional avenues of liquidity for those that have the ability to draw from retirement savings, and they can do so on a temporary basis without tax penalty. It also, this CARES Act law will also waive the minimum required distribution. So many people that are beyond 70 have to take minimum required distributions from their retirement savings accounts. And this actually waives some of those requirements for a temporary period of time. So let me move on to the employee retention credit for employers. This was part of the Families First Act. And basically what this does is it provides employment tax credit on a quarterly basis for every employer that provides emergency leave for their employees. And just to cover again, and we've covered this in our previous webinars as well. You can go there for more detail, but it covers up to 50% of the qualified wages not to exceed $10,000 per employee per quarter. And if any of the amounts that you claim as a credit exceed the payments due as you're making your filings for Social Security taxes, then that overpayment is actually refunded to you immediately by the IRS. So, you know, during the month, the portion of your payroll, let's say for the sake of example, for sick leave benefits for your people was $5,000. That's the amount of the credit that you want to take. But your employer portion of the Social Security taxes is only $4,000. Well, you'll claim the credit, and you'll also claim the responsibility for paying your employer Social Security taxes, but the IRS will owe you an immediate refund of $1,000. So not only will you not have to make payments on the Social Security taxes, but you'll be able to claim an immediate refund for the difference. So there was a lot of confusion about when this starts, and this is a little bit clear as mud, but I'm going to give you the details. So this period begins for employers when your gross receipts in the quarter are less than 50% of the same period last year, and it continues. You continue to be applicable to receiving this retention credit up until the gross receipts of your business go over the 80% of same period last year mark. So this could go for multiple quarters into the future. Finally, I'm going to talk about Labor and Finance Committee provisions. There were some special things in there regarding Families First Response Act, again, about rehiring laid off employees so they can be included in the loans. And basically the federal government is trying to encourage us as employers and business owners to rehire our employees and put them on some form of payroll, even though we've got multiple programs like shared work and various unemployment compensations that are available. And that way, as an employer, you can claim that payroll portion that you're making for those employees and get an immediate refund or get a loan to actually make those payments. They will also be providing special ways to advance the refund credits, as we just talked about in the previous slide. And they're allowing employers to make some changes to the employee benefit plan in order to meet some of the funding targets here. Another major provision, and this is primarily for healthcare companies, relates to telehealth. And they've dramatically expanded the implementation for telehealth programs. They've done that into all other additional areas of medicine. They've even made it so that any licensed service provider in the healthcare field can practice via a telehealth platform. And they have made funding for this applicable under Medicare Part B. So, as you can see, a huge amount of changes into the various programs that are available. And I'm going to summarize a few more of those available for you as business owners here on this slide. So as we sit here today, the SBA has the Payroll Protection Program that is now available to you. It is delivered by lenders. So you don't go direct to the SBA on this, you go to your various lenders. And I think maybe the best place to start is with the current lender that you're currently using.
Hey, Steve,
This particular
can I raise my hand real quick and touch on that?
Yes, sir. Please do, Brian.
I just want to make sure everyone understands this has been approved into law, but lenders cannot currently participate in this program yet. We're still waiting on guidance, and Steve had mentioned earlier, we're waiting for that hopefully by the end of this week, but I think you used clear as mud was kind of the analogy, and I have to agree with you on that. We're kind of on standby, but I just want to make sure everyone, when you are calling your bank, we have a view of it at about 1,000 feet, and Steve shared some great information, but there's not currently an application that the SBA has given us for us to be able to make these loans.
Excellent. Thank you, Brian. But again, I want to reiterate that these loans can only be used to cover your payroll, your benefits, salary, commission, interest, rent, and utilities. And these are forgivable loans. So if you take one of these loans and you use it specifically for those purposes, 100% of the loan is forgivable. In addition to that, there is the SBA Economic Injury Disaster Loan. You apply for those directly with the SBA. much more flexibility in how you can use that loan. And those cover all forms of working capital and any other expense that the business incurs. Keep in mind that there is now a partial grant available on those loans at the application. And those loans can have up to a 30-year term to them, but the SBA will determine the loans on a case-by-case basis. And then there is also the SBA Bridge Loan Program, and these are delivered by lenders as well. These are typically fast turnaround loans that are typically made within 36 hours or less. The lenders are the ones that set all the rates and terms. They do all the underwriting and all the credit approval. Typically, you can get bridge loans up to $25,000 on a very quick basis. And these bridge loans can be repaid in full or in part by proceeds that you get from the EIDL loans if you elect to take a bridge loan and then apply for the EIDL loan. And I should tell you, based on guidance that we received from the SBA late last week, the EIDL loans look like they're running about 3 weeks from application to decision, telling you whether you were either approved or denied. And then if you were approved, an additional 3 weeks for them to disperse funds. So it may be that the economic injury disaster loan takes the longest to get, and the other ones may be available to you in a much shorter period of time. So we had several questions that asked in terms of a roadmap, what might be the way a business might want to think about applying for all this various aid. And we've got a simple 4-step program for you. We recommend that if you're a business owner, you first do your due diligence on the Families First program and make sure that you're receiving all the earned income credits that are, or excuse me, all the earned tax credits that are available to you as you're providing paid leave for your folks. After you make sure that you're getting everything that you're due in that area, then we invite you to take a look at the unemployment insurance programs and the work share programs that are available to you as a business owner. After you've done those 2 things, then it would be the time to explore the SBA EIDL loan program or the SBA Express program and make a determination whether you're going to go one way or both in those areas. And then finally, take a look at the payroll protection program as your 4th step down the road, if you will. And part of the reason for that is that, as Brian mentioned earlier, lenders still do not have the guidelines from the federal government on exactly how to implement that program. So maybe as much as another 10 to 14 days before all of that is known. But I want you to leave this webinar with some confidence that there are a lot of programs available to you. As we did before, we're going to provide some additional resource sites for you here. And there are much more detailed information available in each of those areas. And Marquita, with that, we'll turn it over to questions.
Okay, thanks so much, Steve. I'm going to begin to read through some of these questions. So as we have been reviewing questions in the background, we've written answers to about 16 of almost 60 questions. So we have about 46 unanswered questions. I'm going to begin posing those and trying to group the topics as best I can. So first, Steve, this is an easy one, and it's a repeat of a question we had last week. What is the 1-year period or time frame we look at? And this question was posed in reference to the PPP, that program. When we look at the 1-year period that we're averaging payroll, what is that 1-year period? Is it all of fiscal year 2018, all of fiscal year 2019, or is it 2019 beginning in March through to just before this emergency occurred? So, and it may be another answer. So Steve, tell us, what is that 12-year period?
Okay, so you take a look at the 1-year period before the date on which the loan is made. So let's, for the sake of example, let's assume that you're applying for that loan on April 1st, right? So you would go March of 2020 back to March of 2019. Okay,
thanks. Okay. For CARES Act funds, what is the best estimate of when those funds would be available after application?
So regarding the economic injury disaster loan, there is a new $10,000 grant that they are awarding immediately upon application. So literally that they're saying that will be sent to you within days of application. We don't know whether that means, 1 day or 10 days, but the SBA is quoting that as days. As it relates to loan proceeds, the economic injury disaster loan, the SBA is telling us that that's currently about 6 weeks out in terms of when borrowers would receive it. All the other loan programs are administered directly by lenders, and it would be up to the lenders at that point in time to determine how long it would take for them to but Brian, would you and Dave want to comment on what American Bank's experience is in that area?
Sure, I apologize. Got some dogs in the background if you hear any barking. Yeah, I mean, really from a high level, we just kind of, Dave, and if you want to piggyback on this.
Yeah, sure.
We just don't know, and we hate to provide that answer because generally we know exactly how long a 7A loan would take us to process. So we are still waiting to see what that looks like. I will encourage people, as Steve mentioned earlier, to reach out to your banks. I don't want to say get in line because we don't even know exactly everything you're going to need to provide, but start the conversation. That can't hurt. But just keep also in mind, banks are going to be inundated. Everyone's going to want to apply for these loans, all existing customers, outside customers, referral sources. So just be as patient as you can as we work through this process. We're still waiting on information from the government on how to even tackle it. And then we will do our best to kind of work through the volume.
Hey, Marquita.
Yeah.
I was
Terry.
just going to add on the EIDL program. I will say that I've had applicants that started making application for that program directly at the SBA.gov website. That first Friday it was available, 2 weeks ago now. And they are now getting reached out to with that $10,000 offer, that initial grant process. So I've actually had a couple clients that have, told me that the funds are now coming. So that's somewhat encouraging that they're only a couple weeks in now.
Great. Okay.
I think it's important to note, for everybody listening, we get a Excel spreadsheet with all these questions. So what we did with Friday's webinar is we'll go through and answer all of them, and then we'll include that as an attachment when we email you the recorded webinar. So don't feel like you got to be writing in a frenzy taking notes. You'll get everything.
Yes, we will. As Terry said. Now, team, I want to move forward to another question. This is interesting. If I'm a closed business, so this business already shut down. They were non-essential. They're not paying employees now. Can they still apply for a PPP loan? So the question is, if these employees have not already, or even if they have gone to the state to apply for unemployment, can that be reversed in lieu of applying for this PPP loan? That is putting their people back on payroll and doing the PPP loan. That would be my expectation of how that would have to be done. So can anyone address that? Steve, Terry, do you know, time frame wise, many businesses shut down 2 weeks ago. We know that many people applied for unemployment immediately. Can that be unwound and replaced with the PPP loan on a going forward basis?
So you can't unwind it, but basically they can, if you're a closed business, you can bring employees back you don't have to bring them back full-time, but you can bring them back on a part-time basis. So bring them back as employees. They still are applicable to receive unemployment insurance benefits through things like Missouri Shared Work or the Illinois Sharing the Work program. So you still have some backstop there. And keep in mind that these PPP loans can also be used to cover some of the other operating expenses of the business as well. So you can still cover rent, you can still cover utilities, you can still cover interest expenses, and you can cover, the small amount of payroll expenses that you might bring back into the business. There's a lot of retail, there's a lot of restaurants, a lot of hospitality businesses And there are special provisions in the law for hospitality businesses as a whole. So it's recognized that there are many businesses that had to close due to these stay-in-place orders and other things, and there are special provisions that apply particularly to hospitality businesses that have since closed.
Okay, Steve, several questions in this arena. Can we use subcontractors' payroll when calculating the amount? So obviously a subcontractor is not on payroll. Typically that would be shown as a gross amount paid under cost of goods sold, right?
So yes, so
yeah.
keep in mind that your subcontractors, your independent contractors and your subs, they can apply for PPP loans themselves. So it's not designed for you as a company that's using subcontractors to apply for the PPP loan to cover them. The law is designed for those independent contractors and self-employed individuals to apply themselves specifically for their own PPP program loan, to use that to cover their own expenses.
Okay, here's a person who says, I recently applied for a standard SBA loan for working capital. Can I reverse that in lieu of an EIDL loan?
My counsel then would be go talk to their bank that they applied with to do that, and sit down with their banker and figure out what's the best program for them. If they already have a standing application for an SBA loan, they've done that through a lender, and they should have that discussion directly with the lender. Dave and Brian, would you guys do any differently?
No, I would completely agree with you, Steve. Everything's kind of a case by case. You know, again, today lenders are kind of reeling with their current portfolios and processing deferrals and kind of trying to help our clients. So new loans have become probably more difficult today. So it may be the preferred method from the bank that somebody take advantage of one of these government-backed programs. Again, Brian, feel free to expand on that, but I mean, I would definitely encourage them to talk directly with that specific banker.
Yeah, one thing to keep in mind with that, on every historical 7A loan, at closing, you have to sign a document. Financials in your business hasn't adversely changed since it was underwritten. So most of my clients right now, it'd be very difficult to say that they haven't been affected by this in some way negatively. Now, some are doing better, but that's a rare few. So we've had some conversations with other bankers, and it's most of our bankers we've talked to have kind of put everything on pause for new originations, at least till we have a better idea of what this looks like and get on the other side of it.
Yeah, we've really been advising our folks, and we've even seen some of them take the same practice, that they're going to want to see how March, April, maybe May financials look before they really make any decisions from a lending standpoint or a borrowing standpoint. So, yeah, we'll see there.
Okay, next question, Steve, relates to a self-employed individual or a person who pays themselves through payroll within their firm. If they earn more than $100,000, are they totally excluded from the program? Or are they only excluded for the amount above 100,000?
They're only excluded for the amount above 100,000.
Okay, I think that answers that. Okay, this question. Terrence is looking for a definition of the term funds used to retain workers. Does this mean that we cannot put employees on unemployment temporarily until we're able to fully open back up? So I suspect this question has to do with if we are shut down and people are not truly coming in and really not doing work, can they be considered retained workers?
That's a good question. I don't know the answer to that, but what I can tell you is that it is assumed that we are all going to be going back to work at some point in time. So these loans are designed for businesses that may be closed right now, but after the stay in place order is lifted, it is assumed that that businesses will reopen and get going again. So I would say, you know, there's going to be a lot more guidance that's coming out from the Department of Treasury and Department of Labor and the SBA regarding all of these programs. And since the payroll protection program those loans are going to be administered by local lenders, I would say, talk to your local lender about that. As Brian and Dave so adroitly mentioned earlier, please be mindful of the fact that those guys don't have that guidance yet. It will probably be early next week before we've got more details about specifics regarding the loans that Terrence had asked here.
Okay, great. Two questions regarding the $10,000 grant. One is simply asking, is there a link that gives more in-depth information about the $10,000 grant? The other asks very specifically, suppose we apply, receive the $10,000 grant, and then decide not to accept the EDIL loan. Is the $10,000 grant to be repaid?
So we're going to put a copy of the CARE Act, the entire legislation, in the link to the replay of this, so people will be able to pull it down. You can also go to sba.gov/coronavirus, and there's a lot of information about the EIDL loans in there. And I'm sure the grants, if it's not in there yet, it will be on that site, and they'll be addressing that. But those grants are fully forgivable. You do not have to repay them. And actually, if you apply for an EIDL loan and are not approved, you're declined the loan, even in that situation, you don't have to pay the $10,000 back. So I hope that helps.
Okay, great. Okay, the devil is in the details on this one. Listen to this, Steve. What if you have multiple companies where the owner is an employee of several companies, but their income is less than $100,000 in each company? Are they able to receive funds from each company?
Yes, so the bottom line is each company can apply individually. So this is designed, for a company to company deal. Keep in mind that the Payroll Protection Program loans are administered by lenders. They're not administered by the SBA. So the lenders they have what's called delegated authority to make all decisions regarding that. So if you've got multiple businesses, you're going to talk to a lender about doing loans for each of your various businesses, you're probably going to have some explaining to do in that regard, is the way I would assume it to be.
And Steve, can I piggyback on that?
Please do.
One thing I'll say is, and keep in mind the SBA program's been around since the 1960s, and a bank's appetite for it or what they'll do within the program varies from bank to bank, like Steve just mentioned. So even within this new program, given limited resources, it may be difficult for a bank to process 4 loans for one customer versus being able to get to each customer because of the volume. So just some of the things to consider. Each bank may have a different appetite for what they're willing to do within the program. So to Steve's point, those are the conversations you want to start having with your banker now that you already have the relationship. They already understand kind of what your business model is. And so you can plan accordingly.
I also want to interject here, Marquita, somewhat related, is that a lot of the information that we just shared with you guys is, as a applicant and borrower, you're going to have to self-certify to a lot of the facts regarding these loans. And the punishment, these are criminal, they've made these criminal statutes. So the punishments can be severe. So, I'd be mindful of that when you're putting together your application packages.
Great point, Steve. So here's a good question regarding the specifics of the loan. The 2.5 times average monthly payroll as the max amount for the loan. Let's say this business anticipates that they're going to be closed for well beyond 45 days. How does this calculation accommodate rent and utilities, even though there is an indication that it can apply to rent and utilities?
Yeah, again, this is going to be up to individual lenders to make those discretionary amounts. So it's going to be administered through the various banks. It is only designed to cover you for basically 8 weeks was the intent of the law. It's not designed to go into the indefinite future. But there are a lot of different programs that are available. So keep in mind that the Payroll Protection Program is only one of the 4 major programs that we've outlined here.
Okay, Steve, I think you answered this question, but let's revisit it. On an EIDL loan, will the SBA take a second lien position on collateral if I already have a first lien with my bank?
So it depends upon the size of the loan. If the loan now, according to the CARES Act, has a loan value of less than $200,000, they're not going to take any position.
Okay. So this is interesting. George asks, how does this work for a freelancer? And I'm assuming freelancer means a 1099 employee that still has some work, but has lost most of it. I'm not unemployed, but have lost about 80% of my business.
George, you have two programs that are available to you. One is now you can file for unemployment insurance. And for the next 4 months, you can get $600 a week under the state unemployment insurance program. And that's called the Pandemic Assistance Program. So you have the ability to draw that immediately. Don't forget that you're also going to get a check in the mail from the Treasury for an advanced refund on your 2020 taxes. In addition to that, George, you can file for a payroll protection program loan or through the EIDL as it relates specifically to your business as a sole proprietor. So there are both of those additional programs that are available to you.
Okay. Here's another permutation of a question you answered early. So spouses own the business. Spouse one makes $80,000 and spouse two makes $150,000. It asks, what's the eligibility for rebate in this instance?
Well, from a rebate standpoint, if you're one's filing head of household and the other's filing individual, you're going to have to look back at those limits that we had shared with you earlier. But it sounds like under that scenario, you've got gross income of $230,000. I don't know what other credits are available to you, but keep in mind that the Treasury Department refunds for 2020 taxes are based on adjusted gross income. So they're going to have to look at their individual situation. And that brings up a good point for all of you here. Keep in mind that there are questions like that that are probably best addressed to your accounting firm or tax professional that you're working with.
Okay. Steve, so here is a business. They have part-time workers, and their average pay for the part-time worker is $200 a week. They will get unemployment for the $200, but will they also get the $600 per week?
Yes, they will, but they will only get that for 4 months.
Okay, so essentially $800 per week for 4 months, and then nothing after that. On the rebate, will my tax refund be reduced next year by this potential $1,200 payment, or is it truly an advance? When does that cash flow is essentially the question.
Yeah, I don't know the answer to that, but I think that we'll see over the course of the next 2 weeks, we'll get additional guidance on that, and we'll share that on upcoming webinars. So,
okay. Is there guidance for banks on how the loan is eventually forgiven? If a client doesn't spend the funds as indicated, he goes into a fair amount of detail on some scenarios in which it may or may not be, would there be a risk that the loan won't be forgiven in turn, which would be an unsecured loan, a non-guaranteed note to a potentially struggling business? So let me go back and revisit that. Did that make sense to you, Steve? I'm going to revisit it.
well, let me give you an answer. I'm not sure that it answers this question, but again, I want to reemphasize the banks who elect to participate in these programs are given what's called delegated authority to make all the decisions regarding these loans. Now, obviously, the banks are going to get some guidance from SBA and from Treasury about how to do so. But it's up to the bank then to work with the borrower, and the borrower has a responsibility for substantiating to the bank to whatever requirements the government puts in play that the proceeds of the loan were used as the loan was designed. And what they've said is that for borrowers that do follow the guidelines and use the loans accordingly, up to 100% of their loan can be forgiven. And they say specifically up to 100. For me, the way I read that is, let's say that, you know, due to some circumstances beyond the business owner's control, they use a portion of the funds for something else. Well, maybe only 90% of their loan is forgiven. But it seems to me that there will be an awful lot of questions about that. And I would think that Brian and Dave's comments earlier about the fact that banks are awaiting guidance on exactly how to deal with those situations. We'll have more information around those circumstances.
And Steve, this is Dave. You're absolutely spot on. I mean, I think we share a lot of these same questions on what's going to be required on the back end. After the funds are dispersed and utilized, are we collecting bank statements to show? Are we collecting mortgage statements to calculate the interest percentage that was paid? Are we collecting payroll records to show that it matched what they're prior to the Corona incident showed? So yeah, there's a ton of questions. We share those same questions. I think all lenders do.
Marquita, we probably have time for one or two more.
Yeah, just a couple more. I'm trying to find like the very best one. Let's go here.
Okay, Marquita, while you're looking for the next one, I just want to clarify to everybody that we didn't get around to answering their questions. Within the next 24 hours, we should have this recorded video emailed to you, and we will attach an Excel spreadsheet with all of the questions and the answers. So if we don't get to you today, don't worry, you will get an answer.
Okay. A lot of these are fairly repetitive. So when we pull our, so just so you know, audience, what we're looking through is there are about 58 that we've answered, that we've identified as having been answered, and we've got another 53 open. However, there's substantial amount of repetition in some of the questions. A lot of your questions have to do with making a choice or recommended choices between any or all of these programs, as Steve went through on the first chart, a la EIDL versus PPP versus grants, whatever. Steve, you may want to make one last comment on that comment you made earlier regarding procedurally the best way to walk through considering these programs and where they can find additional information about the details of each program.
Okay, I also want to answer, I've seen a couple of questions here regarding if you owe back taxes, can you use proceeds for that? And the answer to that is no, you cannot. So you cannot use these emergency loan programs to satisfy back taxes. But Marquita, I think we had a debate internally amongst ourselves earlier in the day in terms of what is our recommendation as the best roadmap for business owners to follow. And our thinking at this point is exactly this. So here's the guidance that we're going to be providing for our clients. First off, for those of you that have employees and your employees have had to take leave, pay attention to the Families First Act first and make sure that you're getting full advantage of the tax credits that are available to you as it regards the employer portion of the Social Security taxes, and that you are receiving that benefit immediately for the employer portion of the Social Security taxes that you're paying right now. After you've done that, then take a look at the unemployment insurance programs for you and your employees. So in the state of Missouri and in the state of Illinois, they both have work share programs that are available, which enable you as an employer to keep somebody on your payroll so you don't have to lay them off. You can keep them on their payroll, provide as little as a few hours of work per week for them, and then the balance of their scheduled payroll will be covered under the unemployment insurance program. So make sure that you're taking advantage of every program that's available to you in that regard as a business and for your employees' benefits. After you've got those two things covered, then it's time for you to take a look at, is the SBA Express program or the SBA Economic Injury Disaster Loan Program best for you? And they are two different programs. So again, SBA Express is typically delivered by a lender. So you may want to talk with whoever your current lender is about whether or not they offer that, or perhaps they'll have a recommendation for somebody for you to talk with about that. And if you don't get satisfied there, you can always apply for the SBA Economic Injury Disaster Loan online. And in both of those situations, they both have grant capabilities up front. So the SBA EIDL loan provides up to a $10,000 grant at application. The SBA Express program now has a special provision for a grant up front as well. After you cross that bridge, then finally take a look at the Payroll Protection Program as your fourth step down the walk. And I think that businesses that take full advantage of all four of those areas are going to have a much better chance of thriving through this particular emergency situation that we all find ourselves in. So with that, Marquita, we're a couple of minutes over, and I always want to respect folks' time. Is there anything else that we need to address before you close us out?
I think we should quickly wrap up, but one thing I want to make sure that all of the participants who are on right now understand is that we do a 3 o'clock Friday afternoon webinar. We're only 3 days out right now from the passing of this law, so you will find a lot of your questions were not thoroughly answered. Some of you asked about app forms, things of that nature. As we move forward, we will include in our webinars substantial more information regarding the specifics of this. Steve, can you give me a kind of an agreement on that? Hopefully, what would we be offering on Friday as our next webinar?
So we're keeping our ear to the ground on this and all aspects of the various laws that are available. And as we get more information, we've designed these Friday webinars so that we can pass this information directly on to you folks. And we are endeavoring to just pass along the facts. So we want to make sure that we're getting solid information from all the major participants. In this instance, we've talked at length with the SBA and the Department of Treasury. So we're confident in the information we're sharing. As these things change, we're going to be verifying that and providing as many facts as we possibly can to our client base and those others that are interested enough to pay attention to these webinars. So that's what you can count on us for, Marquita.
Great. And I promise you, participants, that we will look at the over 130 questions that you sent in and ensure that we have answered those in the Q&A transcript that we send out in conjunction with this webinar. We will be sending a recording of the webinar, the slide deck, and the Q&A transcript. And those that we did not answer live during the webinar, we will actually work on getting answers to you because some of these are quite specific. With that said, I'm going to close the webinar out. Thanks everyone for participating, and look for that follow-up email from us with all of the information about this webinar. And we will also be sending out a second email with information regarding the Friday webinar, Friday at 3 o'clock. Put it on your calendar. You will be receiving an invite to that, and we invite you to go ahead and register for that. It will be addressing substantially more detail related to this. And thank you all. Yes.
Marquita, I'd like to also offer a special thanks to Dave and Brian for taking the time out of their incredible busy day to join us for these calls.
Absolutely.
Our pleasure. We hope to have more solid information to provide next time we all gather.
Yeah, thank you guys.
Awesome. Thanks so much.
Thank
With
you
that
all.
said, I'm going to end the webinar, and we'll see you on Friday.